We are here, we are here, we are here. On this amazing day. Everyone, this is Cam Jones, FX Daily Analysis, and we are marking up SKYH. Take a look at what's going on in the market. We are in the monthly time frame price action candle. Last candle in the market, all the way to the right hand side is a doji. So market is consolidating. So where market price came from, this first candle to the left hand side, what the market did was market consolidated sideways, pushed down, probably did a double bottom on the monthly time frame. We do see two spikes down, so that's a double bottom, and then market at a consolidation. So we don't know if that market ran up to the top, shot back down or what, or is it doing a break and retest? It probably did go up to the top here. So we're going to break down the structure. Right now, we're going to add the price action overall lower lows, price action overall higher highs, grabbing that highest wick and highest lowest wick of that area. Last but not least, gauging that top to bottom for that midpoint. So price like is below the midpoint, trying to gauge it in my best of my abilities. How it looks. Headed down to the weekly time frame to see what's going on in the market. So price action candle is a inverted bullish hammer. So price is working its way up from the area of support. So let's draw our screen back so we can see what's going on in the overall market. So market identified a double top here in this area. We have a first leg, second leg, third leg, fourth leg, could be triple top, and the market consolidated. Okay, this red candle retested back up to this previous area, and the market dropped. So it was a double top and a retest. Market dropped down for a single bottom. We got three pushes up to that high. So basically what market did was spike that high of that area 3 times. Something's going on in this area here. We'll identify as we walk down the time frame. And what we're going to do is we're also going to add may not need to add that. So we're going to see what's going on. Headed down to the daily time frame so we can see price action has spiked the area once, twice, 3 times. Let's see what's happening on the daily time frame. Multiple pushes to that top of that area of resistance. Okay, price action candle. Let's talk about that first. Last candle mark is a doji. Second last candle is a inverted hammer. Third last candle is a doji, and so on. So all this is still a market's in consolidation, but market's in a consolidation at an incline. So what the market is doing is, let's just draw it back a little bit. Let's just talk about the overall structure so we can get to price. What the price did was spike down for that first leg, came back up for that second, dropped back down for that third, spiked up for that fourth. So once it got into this area, it bounced up and down, up and down, up and down, up and down. Price action at a retest of some maybe second level highs, maybe a midpoint. Let me say, but like more a midpoint because we are in the range of the SR line we created because grab the SR from the weekly of one of those wicks or maybe the monthly time frame. Price action, last candle in the market, is an inverted hammer. So price is trying to work its way up, having a hard time to break the second last candle in the market, which is a doji. We need price to break this doji for it to push up. Once price break the doji and closes out, then we want price to break these wicks over here. And then by that time, price be breaking out of this SR line to probably retest to work its way up. So the structure will look something like this. Coming down in red for the first leg, coming up in green for the second, coming back down in red for the third, coming up in fourth for the green, and for the fourth leg, so that's the double bottom retest, and that's what market is trying to push up. The market didn't start. I mean, market just started pushing within the first push, still has plenty more to go. If not, that market's coming down for that decline, so that market's going to drop down. What are we looking for? Market's tagging that first leg, second leg, third leg, fourth leg retest. Market push once, retest, and then we're looking for some type of pattern to identify itself, and market push down for that second time, looking for the break and retest, and for that market to work down further, okay? Headed down to a 3-hour time frame. Let's see what's going on in the market. Price action candle, inverted hammer, second last candle, inverted hammer. Price is still, these are still dojis. It's still in consolidation of the third to last candle of the market. Third last candle market is the doji, and price is within that doji with the bodies. This price action wick is a little out. Let's stretch it. Let's look in a little further. We can see price action wick is above the previous doji, but the body, when that body of price will start showing, is going to break out. So as we walk down the structure, we're going to see if price is breaking out the SR line of that we just created. So price is 3 and 2 hour time frame identifying the same thing. Headed down to the 1. Now we start to see some structure forming. So we can start seeing that first leg, second leg, third leg, market pushing up for that fourth. Trying to get that W formation, so market's pushing up. Still waiting for the market to close out above this doji here. See that market's going to push. By the time the market get there, it'll be near the SR line that we are at here. 1 hour time frame, 45-minute time frame, identifying the same thing side by side. Candles, market working its way up, slowing incline with the wicks. Bodies incline as well. So 1 hour, 45, 30, also identifying the same thing, headed down to the 15-minute time frame. Now receiving some type of retest. So let's look over structure. Let's take a look. Okay, so market was at an M. We see a W. So we had that first, second, third, fourth M pattern. Okay, W first, second. Market pushed out for that third. Connected to whole one whole one. Market came off that fourth retest. We're looking for that engulfing pattern after price action, which is currently a doji, for that market to push up or further down. So we did see a doji at the 15-minute time frame. Now we're trying to see that market drop after the 15-minute time frame. The 5 price action has reached near that probably respected support area right here. So we're going to see what's going to happen, if that market's going to pick up from this area or it's going to drop down. Let's also walk down to the 3-minute time frame, see what's going on. 5, 3 identifying the same thing, headed down to the 1. 1 is also identifying the same thing. Showing engulfment of the previous candle, so market price is working its way down so far. Not all the way down, don't know how far market price so far is working its way down. It's just SR line here. Once we get here, see with price, we look for that market is going to break. Retest work its way down further. If not, we'll see that revert to what happened. Went back up. Market comes back up, we'll be expecting for that first, second, third, fourth. That's the retest. Market's pushing up, retest, and so on. And on a 1-minute time frame, we're into the area of resistance multiple times. So we got to look at this area here. So we have 1 spike up in this area, 2, 3, 4. That's 5 pushes at the top. That may just be exhaustion unless market really is going to respect for this W. But that's already 5 pushes to that high of resistance. And that's not the highest high of that area. The highest high is coming from this double top. We have a 1, 2, a double top, 5 pushes for a retest, and that market can't be coming back down if it's not respected in this area. So we're going to see what's going to happen on the 1-minute time frame. Okay, guys, very important information. Please study Forex pattern cheat sheet. Click on images. Also, breakdown retest strategy. Click on images. Okay, guys, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention. SKYH stock.